Hello and welcome back to Vitsik here. Today let's learn in detail about net asset value or NAV, how it is calculated and how corporate actions can impact it, how it can be monitored and understand its importance. There's a lot to cover, so let's begin. Now, by definition, net asset value represents the per share market value of a mutual fund, ETF, or investment fund. It is calculated by subtracting the fund's liabilities from its assets and then dividing by the number of outstanding shares. The formula is NAV is equal to the total fund assets minus total fund liabilities divided by number of outstanding shares. Let's discuss each of the components in detail. Total fund assets. This includes all securities held by the fund, such as stocks, bonds, and other financial instruments. Cash and cash equivalents are also part of total assets. Total fund liabilities. Liabilities encompass expenses, fees, and other financial obligations the fund has incurred. These can include management fees, administrative costs, and any outstanding debts. Number of outstanding shares. The total number of shares issued and held by investors in the fund. Let's review the impact of some corporate actions on net asset value. Stock splits. If a company in the fund undergoes a stock split, the number of shares held by the fund increases proportionally. While the total value of the investment remains constant, the NAV per share may decrease as a result of the increased share count. Tata Motors did indeed undergo a stock split on June 14, 2022 in a 1:10 ratio. This means that for every one existing share held by investors, they received 10 new shares, effectively multiplying their shareholding by 10 times. The impact of the split. Increased number of shares. The total number of outstanding shares of Tata Motors increased significantly from approximately 4.72 billion shares to 47.18 billion shares. Reduced share price. The pre-split share price of Tata Motors was around 450, but after the split, it adjusted to approximately Rs 45. This made the stock more affordable for smaller investors. Increased liquidity. The stock split potentially led to increased trading volume and liquidity as more shares were available for trading. However, it is important to remember that the stock split did not affect the underlying value of Tata Motors as a company. The total market capitalization remained the same. The split primarily aimed to improve the stock's accessibility for individual investors and potentially boost trading activity. Number 2, mergers and acquisitions. Now, if a company in the fund is involved in a merger or acquisition, the fund's manager must adjust the holdings accordingly. The impact on NAV depends on whether the transaction is positive or negative for the company's valuation. The HDFC Limited and HDFC Bank Limited merger in April 2022 was a significant event in the Indian financial market, and its impact on NAV can be analyzed from both positive and negative perspectives. Positive impacts. Number one, more stable. The combined HDFC Bank is bigger and diversified, offering a wide range of services. This lowers the risk and could make NAV more stable. Number two, potentially bigger. The merger boosts growth potential with a larger customer base and more products. This could mean higher profits and NAV increase in the long run. Number three, saving money. Combining operations could make things more efficient and save money, potentially boosting NAV. The negative effects. Number one, merging is messy. Combining two big companies can be tricky, causing temporary trouble and unexpected costs. This could hurt NAV in the short term. Number two, market jitters. Big events like this can make stock prices shaky for a while, impacting funds holding those stocks and potentially affecting NAV. Different plans. Now, some investors might not love the merged company, leading to them selling shares and potentially impacting NAV. Dividend payments. When a company in the fund pays dividends, it adds cash to the fund's assets. The NAV may increase as a result of the dividend income. However, it could decrease by the amount of fees, taxes, or costs associated with receiving and processing dividends. Reliance Industries Limited recent announcement of a Rs 15 per share dividend payout for FY 2022-23 has generated significant interest among investors, particularly concerning its potential impact on the company's net asset value. Here's a breakdown of the possible implications. Short-term impact. Decrease in NAV. The immediate impact will be a reduction in RIL's NAV by Rs 15 per share. This is because the company will be distributing Rs 15 from its reserves to shareholders, reducing the net assets on its balance sheet. Potential stock price fluctuation. The dividend announcement might initially trigger volatility in RIL's stock price. Some investors might sell their shares to receive the dividend payout, leading to a temporary price dip. Long-term impact. Signal of confidence. RIL's decision to pay a substantial dividend can be seen as a signal of confidence in its financial health and future prospects. This could attract long-term investors seeking stable and reliable income streams. Potential for reinvestment. While the immediate impact is a decrease in NAV, the distributed funds could be reinvested by shareholders in RIL or other companies, potentially leading to capital appreciation in the long run. Boosting investor sentiment. Consistent dividend payment can improve investor sentiment towards the company, attracting more investment and potentially driving up the stock price over time. Overall, the impact of RIL's dividend payment on NAV is a complex interplay of short-term and long-term factors. While the immediate consequence is the reduction in NAV, the long-term implication could be positive depending on the factors like reinvestment strategies and overall market conditions. The next big question is how we monitor the net asset value. Now, there are several ways to do so. Let's discuss some of them. Number 1, daily calculations. NAV is typically calculated daily, especially for open-end mutual funds. This daily frequency allows investors to have the most up-to-date information on the fund's value. Investors can access NAV calculations through financial news, the fund manager's website, or financial data services. Number 2, market changes. NAV is sensitive to market fluctuations. Monitoring NAV provides insights into how the fund is affected by changes in the value of its underlying assets, reflecting market conditions. Number 3, fund reporting. Fund companies are required to publish NAV regularly. These reports include detailed breakdowns of the fund's assets, liabilities, and the NAV per share. Shareholders receive regular statements showing changes in NAV and the value of their holdings. Number 4, comparison with benchmarks. Investors compare a fund's NAV performance with relevant benchmarks to assess its relative success. This comparison helps investors understand how well the fund is performing in comparison to the broader market or a specific sector. Number 5, historical performance analysis. Investors analyze historical NAV data to understand the fund's performance over different market conditions. Long-term trends in NAV can provide insights into the fund manager's ability to navigate various market cycles. Number 6, impact of corporate actions. Monitoring NAV involves assessing the impact of corporate actions on the fund's value. This includes understanding how events such as stock splits, mergers, or dividend payments influence NAV. Number 7, investor decision making. Investors use NAV to make informed decisions about buying or selling fund shares. Buying when NAV is perceived as low and selling when it is high is a common strategy based on the belief that it reflects the fund's value accurately. Number 8, redemption and purchase orders. For open-end mutual funds, investors transact at the NAV price. Monitoring NAV is crucial for investors looking to redeem or purchase shares as it directly determines the transaction price. Number 9, tax considerations. Changes in NAV can impact tax liabilities for investors, especially when realizing capital gains. Monitoring NAV helps investors assess the tax implications of their investment decisions. And number 10, communication from fund managers. Fund managers often provide commentary on NAV changes, explaining the factors influencing the fund's performance. This communication helps investors understand the context behind NAV fluctuations. Monitoring NAV involves staying informed about daily calculations, analyzing market changes, comparing performance with benchmarks, assessing historical trends, and considering the impact of corporate actions. Regularly tracking NAV is integral to making informed investment decisions and understanding the dynamics of an investment fund. Understanding the importance of monitoring NAV is crucial. Some of the key points are: number 1, investor assessment. Investors use NAV to assess the overall value and performance of their investment. Changes in NAV provide insights into the fund's profitability and market performance. Number 2, buying and selling shares. Investors buy and sell fund shares based on NAV. They may purchase shares when NAV is perceived as low and sell when it is high. Number 3, fund performance evaluation. NAV is a crucial metric for evaluating the historical performance of a fund and comparing it to benchmarks. In conclusion, understanding the intricacies of NAV calculation and its sensitivity to corporate actions is essential for investors and fund managers to make informed decisions about their investments. Monitoring NAV helps gauge the financial health and performance of investment funds. And that's a wrap on net asset value, or NAV. We covered its definition, formula, impact of corporate actions on NAV, how to monitor NAV, and the importance of NAV. I hope you were able to gain some insight into the complexities of this concept. If you liked the video, please give it a thumbs up so that YouTube may show this video to many more people. And do share the video with your family and friends so they also learn something from it. And lastly, if you haven't already subscribed, please do so that you can stay updated with the knowledge from the world of finance. Thank you for watching. See you again soon in the next video.